Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters ahead of the opening bell. On Thursday, we took a total of 2 trades, 74.20 long call for 41% return, and 74.30 long put for 37% return. That is an absolute gain in our model portfolio of $936, risking no more than 1% per trade, bringing our total return to 20.69% since we started 9 days ago. The SPX closed up 0.17%, closing at 74.45, just below the big 74.50 gamma strike. Nice breakout and volatility in the afternoon, but it was relatively calm in the morning. Modest weakness opening with a gap to the downside into our SPX flip level of 73.95. Bulls were challenged multiple times, but that level did hold firm. And if we go to the 15-minute chart, we can see there was a lot of bottoming wicks there, indicating that demand was present. Now, it took a while, but eventually broke out to the upside. Now, this was in response to a Trump headline, so it was catalyst-driven, creating that squeeze rally into the SPY call wall of 74.70, where selling pressure emerged. We also had a flush down here in the late afternoon. This was also headline-driven, this time by Iran, but that dip was bought. We've stated since Monday, headline risk is high. A lot of these algos just scan keywords, and if these keywords come across headlines, they will buy or sell accordingly, which creates these quick moves in both directions. In terms of market internals, it was much more neutral than imbalanced in the first half of the day, hence the low volatility range-bound action. Breadth, negative 900, growth sectors, outperforming, that's a positive. And then on the breakout, it was broad-based. We had the improvement in breadth, moving back into positive territory, and the upside was led by growth sectors. VIX crushed, closing below the 17 handle, which also provided support for the bulls. For today, not a lot has changed. The SPX trend remains bullish on the 15-minute time frame, with the 20 EMA in green above the 40 EMA in red. This trend change occurred on Wednesday from down to up, so that was the bullish cross. We remain above the SPX flip level of 73.95. Resistance on the upside, SPY call wall 74.70, which more or less marks off the previous session's high, so a break implies continuation. Entry into an upside gap with fill at 75.01, which correlates with the SPX call wall, so potential upside target and upper bound today. In the event of a breakout, we have 75.20, 75.25 resistance, with the all-time high at 75.17. In terms of the downside, support 74.50, and then back to this zone here of around 74.30, 74.25. Transitioning over to our dashboard, total gamma exposure is positive, 955 million notional, trading above our transitional level of 73.95. All strikes above positive, that is supportive for the market price. All strikes below negative, that is destabilizing for the market price. 74.50, a positive gamma pivot. So if we can hold above, flows are going to be very supportive, with resistance at 74.70, 74.75, and then the big 7,500 call wall. In terms of the implied move today, 0.9%. That is an implied low of 73.78, an implied high of 75.12. The market is closed on Monday for a holiday, so we are coming into a long weekend, and generally the day prior to a long weekend is relatively calm, supportive. All of our variables do signal continued support to the upside, or at minimum some consolidation. Of course, that could change. I'm recording this 3 hours before the market open, so always trade the price chart, look at your market internals, but absent a bid in volatility, dips most likely going to be bought. Catalyst here today, Michigan consumer sentiment, 10 o'clock, and then headline risk remains high, so keep that newsfeed up and remain vigilant. Best of luck out there today.